Welcome back, everyone, to Biz Talk. I am your host today. My name is Rachel Weaver. I am thrilled to have with me today Jake Linville. Jake is a certified public accountant that specializes in providing expert guidance tailored to the needs of businesses and individuals. Jake has extensive experiences in controllership, public accounting, income tax, and cost accounting. Jake, it is such an honor and pleasure to have you with us today on Biz Talk.
Thanks for having me, Rachel.
I have some questions for you. The time of year is now to understand a little bit more about accounting before we end the quarter. But I think there are so many people that right now are nervous about things happening in the world of taxes and accounting. We just learned about some new business laws that are taking place and when it comes to taxes. So I'm super excited to ask you a few important questions that hopefully can help everyone today. So can you share with us what are best practices for managing surplus funds or investments within my business?
Sure. First and foremost, short term, you need to focus on how to not lose money, but keep it growing and maintain liquidity so you have access to it when you need it. So first on my list would be hire a smart fractional controller with treasury management experience, such as myself. That treasury management person can go in and invest in overnight T-bills for you. And then in the morning, every day during the business week, you will have a little bit more money. And the bigger the investment you have, the more you'll end up having. So that's a way to keep it from not growing or losing it. And second of all, I highly recommend you keep your eye on FDIC limits for bank accounts. They limit you to $250,000 a bank account. And folks might not know what FDIC limits means. So what it means is basically if the bank or credit union tanks, if you have more than $250,000 in the account, anything above and beyond that is a loss. So I highly recommend if you have more than 250,000, open up multiple bank accounts to keep that money safe. And also consider switching to credit union if you're not already there. They don't charge you bank fees. They don't charge you analysis fees. They don't steal your money while you're sleeping. That you're actually a member or an owner of the actual institution. And lastly, make sure you make strategic investments in technology. In previous segments, I've talked about Tipalti that helps you with accounts payable. It takes out 80% of the work, so you can take those folks that are already in staff and refocus their efforts and get ahead in business. And then there's Brex that helps you get access to short-term credit through credit cards and eliminates the need for expense reports.
Wow, very good information. So tell me, how can I optimize my business's capital allocation to generate returns or support expenses?
Sure. We can first, to optimize the capital allocation, I would recommend, if you can, get rid of your debt. It's counterintuitive, but always make sure to have a strategic line of credit at your fingertips, which goes against what I just said by getting rid of debt. But a line of credit doesn't actually put you in debt. It gives you an opportunity to take advantage of situations that come your way. For example, if you want to buy back stock, or you want to buy out your partner or partners, you can buy them out if you have surplus cash. So, and you can also do that with a line of credit. And like I said last time, or last week, remember to make sure you're playing chess, not checkers. Be strategic in your decision making. Save your money, invest wisely, use those T-bills like I talked about, and be patient. And make sure you hire a fractional controller. I can't say that enough. Folks wait way too long before they go ahead and hire a fractional controller. I do that work. It's amazing. And you don't have to hire somebody full time. You can have them 10, 20 hours a week. And one of the other things that I would recommend you do when you're looking at your capital allocation is sign up with an industry brokerage firm and keep your eye open for diamonds in the rough. Lots of retirements are happening these days. And make sure that you use debt before selling equity in your baby. I know I said that I don't like debt, but I like debt more than giving away my baby, because I've invested blood, sweat, and tears into my baby, and I don't want to give it away. So I'd rather borrow money before giving it to somebody that I don't even know from Adam. And lastly, make sure that you keep your eye on your long-term business plan. If you don't have one, make sure you put one together.
Very, very good information. So really quickly, leading off of that, can you tell me, when would you say is the right time or ideal time to hire a fractional person like yourself, an expert who can help you?
I would recommend you do it as soon as you feel like you're going from being a small business to a medium-sized business. So if you feel like, and this is the rule that I use. So if you feel like things are getting out of control, you need to get a fractional controller. So you can have them come in 10 hours a week, and that can be very affordable. That way you don't have to pay a lot of money. Fractional or controllers can go from anywhere from 75,000 a year to over 250,000. But if you break it down just to like 10 hours a week, they can come in and help you establish those controls and help make sure that your business can scale as it grows. Otherwise, you're going to have these outdated business processes as you grow. And then when you're bigger, you're going to wonder, why in the world are we still doing these things that we were doing when we were small? And what a lot of folks say is, well, that's the way we've always done it. Well, that's not always the best way to do it. So I would say when you're going from a small to medium, don't hesitate.
Very good. Well, this is such great information. Perfect time of year to reach out to someone like Jake. Jake, where can we find you?
You can find me on bookmycpa.com. You can find me on LinkedIn, and we're also on Facebook.
Fantastic. Well, thank you so much for being with us, Jake. We look forward to hopefully having you back again soon. And it's time for a commercial break. We'll be right back.